Welcome to Finance at the Jobsite, the podcast where construction finance meets the field. I'm your host, Rishi Srivastava, founder of Being Human. In each episode, I sit down with construction CFOs, controllers, owners, project managers, IT leaders, ERP consultants, and industry experts to uncover how they connect the back office with the field, choose and implement technology, manage cash flow, and drive profitable projects. Whether you are running the numbers, leading the team, or designing the systems that keep projects moving, this is your place to learn what's working, what's broken, and what's next in construction finance. Today, our guest is Josh Bohlke. Josh, welcome.
Hi, thank you, Rishi.
First section is on your career and perspective shift. You started in commercial banking and moved into a CFO role for a contractor. What fundamentally changes in how you think about risk and cash flow when you are inside the business versus lending it?
Just the amount of detail involved in it. From the lending side, everything is very theoretical, and it's really interesting moving into kind of the behind the scenes and just how many levers there are. Obviously, as a lender, you understand statements of cash flow and what all the levers actually are. But then even further than that, all the levers that are behind those, those metrics. And so just understanding that it's way simpler to say from a lender's perspective and way harder to do on the construction side.
I was working in banking as well. Model risk management. It's very interesting when you look at all these businesses aggregated and try to make forecasts on how the business is going to behave in the future versus you when you're actually in one of them.
Yep. Oh yeah. It's really interesting and you do view risk very differently. I mean, simple things, just from the safety component to all the ins and outs of the insurance policies and all the things that can go wrong there. You just don't think about those in the commercial lending space. You think of the big ones, but yeah, as you dive in and directors' policies and just all the risk factors that go into running a business of this scale, and frankly, an industry that is higher risk from just a personal safety component as well, and all the factors there. So it's definitely a lot different on this side of the desk, that's for sure.
Yeah, the certificate of insurance. How closely do you track for your subs or vendors or whoever?
Yeah, we don't do a lot of work with subcontractors. We do it often, but they're generally smaller projects. So it's typically, we'll do excavation, things like that. But we don't have a lot of subcontractors doing big portions of our work on site. So we don't track them a ton. Our vendors, depending on the size and how instrumental they are. So for example, we'll get large material suppliers on big jobs, and we will quite often, work with them directly. They tend to be larger national firms, so it's not as big of a deal. We've had a couple of vendors go out of business in the middle of projects, some smaller subcontractors, and it, we were able to recover from that pretty quickly. So nothing detrimental, but yeah, this is an industry where bad things can happen, and you need to be on your toes, and you need to be vetting the folks that you're working with to the best of your ability.
What was the biggest quote unquote, oh wow, this is different moment when you moved from fractional CFO work into a full-time operator role?
I think I alluded to it a little bit talking about the details, but I'm going to say the WIP. When you look at a WIP on a reviewed financial statement, that makes sense. When you're calculating it, you're looking at it on a job by job basis, and it's, not just those top 20 jobs. You have hundreds of jobs sometimes, and the ins and outs of the over under billing and how you get there. And oh my gosh, this one was wrong last month because this invoice was sitting out there and didn't get approved, and just all the little nuances of the WIP. That was probably the biggest oh wow moment, where it was like, this is not as easy as it looks from the lender side of the desk.
One previous guest said, WIP is one report to rule them all.
It absolutely is. It really encompasses everything, and it's it's not a science either. It's way more of an art than I had thought. It seemed pretty black and white sitting from the lender's chair, but when you're digging into it, there's a little art to it for sure.
Yeah, and there's so much of your judgment and your project manager's judgment is right there in that report.
Absolutely. Yep. And just even the projected cost. I mean, it all centers around your projected cost. And if your projected costs are wrong, all of it's wrong. And, from my chair, I'm counting on the field guys to make sure that they're actually, looking at their productivity tracking. They know exactly where they're at on the job and not doing free work, for example. And you're putting a lot of faith in them for a document that realistically your name goes on and you're delivering to the lenders and to the bonding companies and that kind of thing. So it's interesting for sure.
Next section is construction, finance, reality, ground truth. You are operating a $30 to $40 million electrical contractor. What are the 2 to 3 financial levers that actually determine whether a year is successful or painful?
I kind of look at leading and lagging indicators. So for the leading indicators, it's your backlog. That's going to tell you, how did you finish the year? What kind of work have you estimated and bid, and what's sitting there for next year? Even if you end the year with a $1 million net profit, but you have 500,000 in backlog, to me that wasn't a successful year because you really focused on the execution side, but really dropped the ball on the business development side. So you got to have a solid backlog at the end of the year, and then obviously your GP. Where did the GPs come out? And if I know what our GP is, I can tell you pretty immediately whether or not we made money without even looking at the bottom line. So GP has to be in a certain spot. I think, we may talk about this in some of the other questions here, but looking at your indirect costs and how large those were relative to direct costs and relative to revenue. And so there's a few metrics in there, but I'm going to say backlog and GP. So how you really ended the year and then how you're set up for next year as well.
A quick question, like electrical contractors, how do you guys compare against, let's say, a mechanical contractor or concrete contractor? Any significant differences?
I would say yes, in some ways. In some ways, it's pretty similar. I mean, I would think that our GPs tend to be pretty close to the same. They're looking at the same backlog and work in progress. When it comes to estimating, I think that there's a lot of gotchas in the electrical world just because there's literally thousands of components that we have. Different things from a material takeoff perspective when you're doing your estimate. I think and possibly, a mechanical contractor is going to say the same thing, but typically we like to think of electrical as there's just a lot more inputs, a lot more, a lot larger material schedule and a lot to consider in the takeoff. That would maybe be the one differentiator. But I mean, overall, I think from a financial perspective, it's pretty similar.
Where do you see most contractors get job costing wrong, especially when they think their numbers are quote unquote?
Probably in the indirect costs. I've seen, overhead be inflated, indirect costs be non-existent, or, they try to put not enough in the job or too much in the jobs. And so I think the biggest thing though is when you're looking at your percentage of completion, one thing that we've been able to do, we've tracked productivity pretty tightly, and we've got some systems in place for that. So when I'm looking at jobs, I'm looking at percentage of completion based on man hours, quantity installed, and cost, percentage of complete based on cost. And when you align those three things, you really get some decent answers there. For example, if you are 90% of the way complete on cost and 40% of the way complete on labor hours and quantity, somebody overspent somewhere, or, assuming there's not a huge material purchase that's in there, big, switch gear or something like that that's causing that. But if it's just overspending the cost, so I think looking at it from 3 or 4 different angles, if you don't have that multi-dimensional look I think it's really easy to lose track of where you are. And that's probably the biggest piece is making assumptions, the field, the PM not knowing exactly where they are on the job. That's where that last 10% of the job, you see a ton of fade really quick. So
Yeah.
that's probably the biggest area.
And you're going through some changes right now in your company. You want to talk about any of those?
I can very high level. We're basically rolling up another sister company into ours, and it's been, for various reasons, it's had to be on a very shortened time frame, and so it's been interesting. Thankfully, we just went through a reconversion of Spectrum about 2 years ago, and stayed pretty fresh and current on that in various ways, and so it's obviously never as smooth as you want it to be, but given our time frame, I think it's gone very well, and spent a lot of time over there, and because you're not just meshing financials, you're meshing cultures and people, and there's all kinds of elements that go into that, and it takes some pretty serious leadership to walk through that. So it's overall, I would say it's been very positive.
Thank you. The next section is systems and ERP truths. You mentioned issues with ERP tax tables. Can you talk about some of that?
Yeah, I think the biggest thing that I would caution folks on is whatever ERP you're using, if there's built-in tax tables, I would highly recommend visiting with your CPA, making sure your CPA is reviewing those, and then test your software. Make sure that the software is doing what it's supposed to. It is very easy to lose trust with your employees if there's a hitch in there or something's wrong. Go the extra step, put in some effort to test that, analyze it, make sure all of your taxes, this is on payroll specifically, make sure that things are coming out appropriately. And if there are issues, as we did, face them and make the correction. And that's the best thing you can do. But yeah, I would highly recommend whatever ERP you're using to double check the tax tables. Don't take anybody's word for it. Make sure that those are set up correctly. So
In most software, you have to actually know your business very well to validate what software is producing.
you do. And I think it also depends on your state. It's really helpful to understand your state tax laws. We're right on a border between Washington and Oregon, and we have a lot of jobs in both. And we have folks that live in Oregon that work in Washington, and folks that live in Washington and work in Oregon. Understanding the reciprocity, there's a lot that goes into it. And especially when you get states with, several layers of payroll taxes and various funds and things that are added to the paychecks or deducted from the paychecks, it can get incredibly complicated. And, you get into the nuances of, well, they were there for an hour. Does that count? Is it a half a day? Is it a full day? And there's a lot to think about there. And we want to do it right. We don't want to get, a year down the road and have a entity audit us and say, oh, you owe $75,000 because you did this wrong. And so we spend a lot of time with our CPA making sure that those are correct.
Makes sense. If you had to rebuild your ERP setup from scratch today, what would you do differently in chart of accounts, cost structure, or data design?
Yeah, well, we just redid it 2 years ago, and so we learned a lot through that. There's probably a few things we would do differently. It's pretty clean. One of the things that we focused on is, we took our chart of accounts from about 5 or 6 pages down to 2, and there's so many modules within the system to analyze the business from different angles if it's being maintained appropriately. A lot of business owners fall into the trap of trying to analyze their entire business from the P&L. And so they have a GL for everything. And you don't want to do that. Make it clean. We have, direct costs, and every direct cost GL starts with job. Every indirect cost starts with IND, and chunk up your P&L to look at your GP before indirect costs, after indirect costs. Breaking it up like that is extremely advantageous for us for analyzing and comparing our metrics to industry benchmarks, NICA averages. And so that's been really helpful for us. If we had it to do over again, just minor things probably when it comes to naming conventions, vendor codes, employee codes. There's probably some ways that we could have simplified it a little bit. And now we've experienced some growth since we did the implementation. We've moved into using cost centers and department codes, and there was a lot of that stuff that wasn't set up appropriately when we first started because it was new to us. But now that we've had the use case for it, it's like, okay, that makes sense. I know why that's there, and so I can imagine, being a smaller company and not really having a clear grasp on what those are for, and running into a lot of just messiness with that. So.
Yeah, actually, I was reading one company filed Chapter 11, a construction company, and the owner was paying like 120% interest rate on some loan.
Jeez, yeah, that's crazy.
A smaller company probably wasn't as fluent with numbers.
Yeah, and again, if it's not maintained appropriately, that stuff can hide, and it's really hard to find, and especially for the owner, they shouldn't be in the minutia of the financials. And so, it's one area that a lot of smaller companies try to skip on, and it's maybe one of the last places that you want to skip on.
You said analyzing the entire business from the P&L alone can be a quote-unquote horror story. What should construction leaders be looking at instead?
Well, coming from the banking world, and I'm sure my bonding surety colleagues would say the same thing, not enough small business owners focus on their balance sheet. Your working capital, are you growing equity? Are you taking all the equity out in distributions? The company has to be a living, breathing organism on its own, and it needs to grow just like anything else. And the way it grows is through retained earnings and through its balance sheet. If you're not paying attention to that, you're missing a big chunk of the health of your business. Profitability is great. Yep. Cash flow is how the bills get paid. But to me, the balance sheet is your report. So you really don't know how you're doing if you're not looking at the balance sheet.
It's very difficult to understand the balance sheet. P&L is so easy.
It is.
It's red.
Yeah, exactly. And, you get into these really nerdy topics like working capital and current ratios and leverage ratios and all of that. And it's nerdy, but the funny thing is that everybody who is, bonding your jobs, everybody who's providing you with lines of credit or loans to help you grow, they're looking at those numbers. And so if they're looking at them and you're not, you're either really lucky or that's why you're possibly struggling to get bonded, to get loans. So it's the business owner really needs to understand that balance sheet and what it's for and what it's telling you.
Next section, Josh, is data, discipline, and strategy. How do you define quote unquote clean data in a construction ERP? And what's the real cost of not having it?
Just from my days as a lender, it's really easy for me to look at a balance sheet, for example, because that tends to be where the most mistakes happen. You'll notice that there'll be a lot of negative balances on your liabilities. It's really easy to do because of double entry accounting, your debits and credits, and they're not hitting the right things. And not going to pick on QuickBooks here, but it's really easy to do in QuickBooks as well because it kind of lets you do anything. And so if you're not looking at that correctly, you'll immediately see negative balances. You're not reconciling your GLs. We reconcile every GL every month, balance sheet on the balance sheet. And so that's an immediate tell that the data is not clean. If you see wide swings in certain ledgers, general ledgers from month to month, 1 month this general ledger looks like a monthly expense, but you'll see 40,000 one month and zero the next and 80,000 the next month. Somebody's not being consistent with how they're reporting certain transactions, or it's really easy to spot, but that's kind of surface level, Rishi. And then it goes from there. Not saying that we need to audit every aspect of our business all the time, but I see a lot of mistakes being made in payroll and a lot of mistakes being made in liabilities. Those tend to be the biggest.
Yeah. We actually have a portion in software which help customers track their certificate of insurance. And we were trying to get active jobs for these customers. And like there's so many unclosed jobs in their ERPs. There's like,
That's a great example. Yeah. Or, and we see that a lot. And the worst part about that is if a PM knows that job is active and he can put his time to it and not on his job, you're getting horrible data. You may be losing money on a job. They're throwing it in this job that nobody's looking at because it should be closed. So, and the same goes for POs too. We have a lot of, we find that quite frequently in our audits. We find POs that have been open for, 3-4 months and which that can happen sometimes, and those can be completely valid, but they'll be open with, $1 or $2 left on them. And so you got to clean those up.
PO is a great example. Another instance where the customer was expecting like 100 POs and we show them like 10,000 POs. It's like,
wow,
all these unclosed POs sitting there. And you say, oh, we got to go clean up.
Yeah. Yeah, it can get daunting, and it can become a monster if you're not watching it. I've seen AR aging reports, not marking things as paid and stuff sitting on there, and maybe it was a credit, maybe it needed to wash out somewhere, and so I've seen AR aging reports that are 45 pages long, and
yeah.
I mean, unless you're just not paying your bills, it shouldn't be that long. So
yeah, that's definitely a good point. Actually, on the same line, we were talking about lien waivers, and this customer uses Corpay and Vista, and they're not marking the paid flag in Vista. It's only in Corpay. So even if the money moved, it's not marked in Vista. There's no way for us to go figure it out that money moved. It's only in Corpay, so we have to actually go and do integrations. It's just the data cleanliness is such a big problem.
It really is. And, especially with these big ERPs, because stuff can hide and you can not see it. Yeah, it's a big beast that requires constant maintenance for sure.
Right. What point should a company consider reworking its chart of accounts or even doing a full data reconversion?
I could probably make an argument for any point in time.
Mm-hmm.
If it's been, let's just take an example of where we were. I'm just going to lay it out like that. We'd been using Spectrum for 10 years, and we got some initial training from Trimble, and I'm guessing that was fairly decent training. We were using the system mostly how it's supposed to work, but it was a behemoth. And, like a lot of firms, there had been some turnover in the accounting department, and you had a lot of hands in it. At that point in time, we even had our project team in it. So we had PEs, multiple PEs coming in and out, working on touching SOVs and budgets. And I would say if you're to the point where you can't trust the data in your system, it's time to do a reconversion. And we invested heavily into that reconversion. But I can tell you now, we're able to identify problems in weeks versus months, and it makes a huge difference. I mean, I would say we've probably recouped our money 3 or 4 times over just in the fade that hasn't happened because we're able to identify issues sooner.
Yeah, reconversion. And when you're reconverting, why do you want to reconvert into these older ERPs? I'm going to just say it out loud, like Foundation, Vista, Spectrum, or like all this bunch of these old ERPs, right?
Yeah, and I'm going to say that I was not part of the decision-making process for that. They had just kicked off the reconversion when I came on, so I was not part of that decision-making process. I can tell you that Spectrum is it has its place. It seems to work for us pretty well. One of the positives of Viewpoint Spectrum is the back end is incredibly intuitive. We've effectively automated our financial reporting, and so that has been very helpful for us. I'm going to say that I've used a lot of different ERP systems. I've used ERP systems that are still on the DOS green screen, and in other industries, not in construction, but in other industries, and I think they all have their pluses and minuses. And at the end of the day, using what you're used to, there can be significant cost savings just tweaking, the little things that need to be tweaked, but you're absolutely right. Technology is evolving very rapidly. Integrations are critical. All of our software, we want everything to tie together as much as possible, and some are easier than others. And so there's nuances there that somebody has to factor in when they're looking at their ERP. But yeah, I mean, to some extent, none of them are perfect, right?
Yeah.
But just finding what you're comfortable with, I think, is a big part of it.
Actually, the back end of Foundation and Vista is also very good, just like Spectrum. I wish they would just put a pretty looking web interface on it.
Yeah, for sure.
Because the 30, 40 years of knowledge that these ERPs have, they are quite valuable, that knowledge. I mean, I am thinking here, because sometimes I think how long it takes to develop an ERP and all this knowledge these guys have over time.
Yeah.
It's tough to accumulate.
Yeah. Well, there's definitely some benefit to having, like you say, 3 decades of, tweaking and reprogramming. But there's also within that 30 years, a lot of bolt-ons and, different functionality that's been added, and sometimes it works well and sometimes it doesn't. But yeah, I don't know that I haven't used a lot of the other ones out there. So I don't know if I'm the best one to opine on which one is best. I can tell you that the way more important factor is whatever you're using, make sure you're using it correctly and make sure the numbers are telling you what it needs to tell you.
Point there. The next section is automation and AI. You've automated payroll and are exploring AP automation. What's your framework for deciding? Build internally, buy software, or wait?
Well, we are waiting right now simply due to time constraints from some of the other activities we have going on. But I've talked to several folks out there. We have automated payroll for the most part. That is what we've done there is we also use Procore for our time tracking and project management. And then we've used a third-party developer to come in and tie those two together. And that's worked very effectively. And because they've been able to custom program some of the functionality, it's really helped us with our cost centers and department codes and all of that. We've been able to programmatically tell certain time and hours and costs where to go. So that's been super helpful. We're hoping to do the same thing with AP. We're looking, ideally, what we would have is some type of system that does both credit card transactions and, regular invoices that we get in. And there's no way for us to get around this. It's so time consuming. What I'd really like ultimately is for my AP person to be more of a vendor manager. And I think there's so much data entry right now that we lose some of that touch and that interaction with the vendor and really, focusing on where do we get the discounts? How quick do we have to pay? What are the terms? Is this pay when paid for, is our job pay when paid? So do we need to see if we can negotiate passing that down to the vendor? All of those types of issues, I think we're maybe losing that a little bit right now because we're stuck doing data entry.
Yeah.
So having a system that does both of those, does the invoice, character recognition, and then also the credit card transactions. We've looked at systems that are card agnostic, so you can bring your existing credit card. We've also looked at some that offer point systems and their own card, and those have their merits as well. We're still fairly early in the process because we put it on hold, but yeah, there's some good stuff out there, and I know Rishi, you've got a good software as well, and so I think what it's going to come down to is just which one works the best with our system, and where are we going to avoid the hiccups, because we've seen software that says it integrates with Spectrum and it just doesn't the way it's supposed to. And so we're pretty cautious with that, but I know that a lot of folks have come a long way with that, and it's not insurmountable for sure.
Procore just released their Q2 earnings and Q3 guidance. And in the Q3 guidance, I just published a LinkedIn post on that one. They're definitely trying to get prices hiked up on the renewals because the new customer intake is not as high the projected. There is a lot of competitive pressure on them.
Sure.
To get the new customers. So what are you thinking on your renewal with Procore?
We're going through it right now. In fact, I think we might have just signed it yesterday or the day before. It's become such a big part of our workflow and our system right now. It's hard to imagine, migrating to something else at this point. And this is a real thing when you talk about conversions and integrations and all that stuff. Software fatigue is real. That is implementing. We've implemented a lot over the last couple of years. We did the Spectrum and then Procore, and we've done some other ones. Back to your original question, I will say that we are playing around with building some of our own software with AI. One of the things that we've noticed is you have to be very careful with that. There are some security issues, maintenance issues. If the person that built that leaves, how do we maintain this? So there's a lot of those types of factors to consider when you're building your own. I think what we are building is really more kind of individual workflow type processes, not entire systems that, our whole company is, the workflow revolves around. It's individual little tasks. But yeah, so I think I think we're going to keep it to that for a while.
Yeah, actually, think about the software market. Last 1 year, you've seen how much market share has been gone out of these all SaaS companies like Salesforce. Procore has lost like 20% of their market value too. SaaS is now so easy, right? And now all of us, we are getting measured on EBITDA. Like we are like selling porta potty pretty much. Software is like so kind of different in just 1 year. What do you think?
Yeah, I agree with that. Well, I mean, there was a point, I think you and I may have had this conversation at some point in time, but is it even a viable business model when everybody can just create software customized for their needs? And I was talking with somebody else and they said, so are you building your own email platform too? And I thought, okay, that's a good point. There are going to be some things that are just so everybody needs, they're ubiquitous enough that it doesn't make a lot of sense trying to develop your own. So I think there's definitely some systems like that. I think what we're going to find is that there are going to be a lot of security issues. We had somebody who was vibe coding at home and tried to build something, just kind of a sandbox, testing some things, and found that his registration emails kept getting kicked back. And it was because the way it was coded into the system is that was routing through a Colombian domain to send the registration. And almost according to our IT people, most networks and infrastructures these days block a lot of those types of domains. And so it was just something simple like that. And he had no idea in the coding that was what was happening. So I think we're going to see a lot of security risks like that popping up with this. And I do think the pendulum's going to swing back a little bit the other way, where it's not, we don't need software, we'll just build our own. And we're going to run into problems because you don't have software architects building those software. It's pure vibe coding. And like I say, it can work for, maybe some basic workflow functionality, but not for entire systems that your company's built around.
Great point. Where have you seen automation actually work in construction, and where has it failed despite the hype?
Ooh, that's a good question. I think, when it comes to really repetitive tasks like payroll, like, where you can build these algorithms around and say, every time you see this, it needs to go here. That's pretty easy. I think where we have seen it not as robust, or at least maybe has still some pretty significant weaknesses, is in the estimating. There's so many variables when it comes to estimating. You can't just build an algorithm around that. A lot of it's judgment based from the estimator, from the pre-construction guys. I think they're going to struggle with automating the estimating piece. There's so much human interaction that has to happen with some of those tasks. It's just, I don't think you're going to fully ever get there without some human intervention.
By the way, did you end up having a big hike from Procore, or were you able to negotiate?
I'm going to say I don't know fully, because we added a couple things and subtracted a couple things at the same time. Our bill was higher, but I haven't dug in yet fully to know exactly what the cost of what was dropped and what was added. So it's not fair on this podcast. I don't want to call them out. Our bill was higher, but that totally might be our fault as well. So
we all are people, right? This podcast is not perfect. I have my biases. You have your biases.
Sure, for sure.
Right? You mentioned using LLMs for reconciliation. How do you think AI changes the finance function over the next 3 to 5 years?
Well, I think security, as I said before, is going to be a big deal. When you start talking about dumping data, I mean, the ideal scenario is all of that we talked about, pulling SQL queries and everything out of Spectrum. It'd be really nice to just hook up an LLM to the back end and say, go. And then you could have anybody, you could still put some limits on that. But when the owner wants to look at something or see a report, it'd be really handy to have him just be able to type in a prompt and have it give him the information. So I think that we're moving in that direction. I think that there's so much security concern around that it's going to take a little while. So it's not that the technology's not there, it's that the technology around security is not quite there yet, as far as ensuring that we've captured all of the potential risks and vulnerabilities there. But it's having an impact already. After we implemented, I started doing a bunch of work with Power BI. And to some extent, it's a little outdated. The things that you can do with like I say, with AI is it's kind of making it a little bit of a thing of the past. I mean, it's always going to need to be there, I think. But AI, let me rephrase that. It's going to be there as long as we have the other security risks. But once they kind of get over those security risks, or you can somehow isolate your LLM to just your information, I think a lot of the typical work that I do, it's going to change from building spreadsheets, building reports, building dashboards. There won't be any more of that. It's all going to be about, what does it all mean? And how do you interpret it? What are you watching? And then how are you building a strategy around what that data is telling you? Which is what we do now. We just spend so much more time physically creating those things. And there won't be a need for that at some point.
And one piece of technology a lot of times is not being talked about enough is MCP servers. MCP is so important because all these AI models need something in the middle so they can connect to this system of record. Consistency on those MCP servers is a big problem right now, and things are evolving there as well.
Yep, for sure.
So if you could redesign the entire back office workflow, AP, approvals, reconciliation from scratch, what would it look like?
Man, yeah, I think a lot of it is around automating the input of that, the AP, and we've talked about that. The approval bottleneck, I don't know. That's a tough one for me. Obviously that's one that's hard to overcome. Every month, at the end of the month, our controller is sending out emails, nagging folks to get their approvals in. On the one hand, it's almost hard to automate that. I would love to just have the AP approvals be somewhat automated, but there's just there's so much human decision that goes into that. Hey, this is on pause. We didn't receive this, or we received the wrong thing. Don't pay this invoice. And we don't really have a choice. We have to count on the project team to be able to do that. If there was a way that somehow we could bake in, an audit of some kind, maybe, is this a duplicate? Is there something going on with this job? Is there a way to flag something more from an automated perspective? But that's really difficult to do, because there's again, that when it comes to all the variables, there's only so much you can automate that kind of stuff.
Yeah, and AP is so much about stuff happening in the field.
Yes.
I mean,
Yep.
you get a $10,000 bill that could be wrong because the material was off spec.
What would really be cool is a reconciliation to statements. So having something where, your system could go out and look at your customer portal with one of your vendors and pulling statements down and running that a check against what's in the system. Are you missing things? Are there duplicates? Having a system that would make that piece automated, I think that would be fairly easy to do. You're not going to get around the approval piece of that, but at least you can get around the, hey, we never received this invoice and it's 2 months down the road, and now it's like, hey, this is outstanding, and you get those bad surprises. And we don't run into that too much. We do a pretty good job of auditing regularly, monthly, with our largest vendors, but some kind of an automated check would be super helpful.
Yeah, definitely. You've built out a relatively sophisticated finance team for your size. What roles actually matter, and what mistakes do companies make when hiring for finance?
I think they all matter. Right now, the way we have it built out is we have our AP person also does payroll. There's really not a science to that. It's more of just that was kind of the strength. Our project accountant also does accounts receivable, and that one does make a lot of sense intuitively. Through the project accounting function, she's learning the customers, understanding, knows what's coming up, kind of understands the job, what's been negotiated on the contract. So she has a lot of insight into that when it gets time to build that. And then she'll have some direct interaction with the customer. And so there's a lot to that. I would say from a controller perspective, we're for our size, we're a little small for a CFO and a controller. I don't think one is more important than the other. Having somebody with a pretty serious and significant accounting background, obviously, that's how we keep our data clean. That's how we maintain it. We audit. And so there's very few bugs in our system, and that saves us a lot of money when we go to do our financials and taxes every year. I mean, to some extent, you're going to pay that one way or the other. And then on the CFO side, in my mind, a CFO should ensure that the data is clean, because if you don't have clean data, you're making bad decisions. And so, but the controller is very historical looking, and the CFO should be very forward looking. Job doesn't stop at just closing the month. It's taking that information, offering strategies to ownership, to the CEO about what to do, how to react, how do we fix this, and being strategic in that regard. Growth, is it organic? Are we going to look at mergers? Are we going to look at different types of industries, different focuses there? So there's a lot that goes into all of that, and they're both incredibly necessary. Obviously, if we were planning to stay at the size we're at, we're pretty heavy in that regard, but we're continuing to see some pretty consistent growth, and I do anticipate more into the future.
This is the last question, Josh, and somewhat making you think about the last few years of your life. What would you tell your past self 3 years ago?
I think what I would tell myself is kind of buckle up.
Mm-hmm.
It's going to be a wild ride, and I thought for a while there, I mean, instinctively, I knew there's always things to work on. You're never going to arrive. I've always said that, but there was a little piece of me that thought, okay, doing this full time now, we can get this pretty dialed in and we can coast a little bit. And that's not even remotely close to happening. So we do have the things built out. They're telling us a lot, but there's always more to do. And so it's kind of like, just enjoy the ride, learn as much as you can, retain it, take notes. You're going to use all that stuff again in the future. And so, yeah, I just think, recently I've had a chance because we've gotten things pretty squared away on the financial side. It's also about building your network in this role. And the last year or so, I've really tried to do that and work on building the network, and that can go just as far as anything that you're doing sitting behind the desk. So I would have probably focused on that more earlier.
Yeah, actually, last week I interviewed a CFO who just got let off because some conflict with the ownership between owner's wife and the CFO. There was some conflict, and it's kind of interesting because the numbers, they're important, but also all this politics of this construction and the business is so important as well.
Well, and in our role, because it is strategic, we have to have those honest conversations with ownership, and they're not always fun conversations. Hey, here's what I'm seeing from my perspective. I think we've hired too many people. I think we need to slow that down. We need to, do X, Y, and Z. There's no way for them not to take it as you questioning their judgment. I mean, it's human nature. And so the way you approach that needs to be incredibly delicate. I'm not saying this person didn't do that. You can still have those conflicts regardless, but it does take a lot of tact. And I think a lot of CFOs, especially the more accounting focused ones, tend to be very black and white and very just kind of raw with their feedback. And certainly I've seen that, with other folks that have that kind of viewpoint. And so it's our job as leadership to work with folks and train them that way. But then, we just have to be tactful, but we do have to be open and honest. If things go wrong, everybody's going to look at us because we're the one handling the finances. So if you see something, you have to say something, but there is a right way and a wrong way to do that.
Yeah. So if the Chapter 11 happens, the CFO goes to jail first.
Yep.
Josh, thank you so much for your time. I enjoyed this conversation.
Rishi, it's been a pleasure. Thank you so much. All right, take care.
Thanks for listening to Finance at the Jobsite. If you found today's conversation valuable, share it with a teammate and subscribe so you don't miss the next episode. You can listen on Apple Podcasts, Spotify, or Audible, or watch on YouTube. Just search Finance at the Jobsite. Until next time, here's to building smarter, faster, and more profitable projects.